Good morning, traders. This is Tony D from easyMarkets in Sydney. A very quiet period for FX over the last couple of days as Christmas has really put a lot of the markets to sleep. Not many players, not much news out there that can get the markets moving. A lot of stock markets are closed as well. A lot of commodity markets are closed. Therefore, you're not getting any impetus, and really there is lack of headlines. The only big mover in the markets is, of course, Bitcoin. Had that big plunge on Friday, down 40% from the highs. That's the size of their normal corrections that Bitcoin's been doing after big rallies. So this is all very natural and all very normal inside a market which is moving at a very accelerated pace. So basically getting the boom and bust cycle in weeks rather than years that you would get in a normal asset. With what we've seen is it did get down to 11,000 on Friday. It's rebounded, opened up around about 13,000. 800 yesterday after the Christmas break, and then we've seen a little bit more of a ramp here up to 15,000. Tested 16,000 briefly, but just settling down now at this 15.5 level. In terms of what is normal here, if we are in an uptrend and the market's going to continue buying on dips, you should see any dips at this point be well contained. So it would be surprising and a little concerning if we were to get back below 14, 13,000 here. Really shouldn't, you shouldn't need a double test of that 11,000 level. If the buyers are still in control, then you should see buying come in on the next dip significantly higher than that. So look for the market to find support above 14,000 if we're in an uptrend. If it breaks 14,000, start to be a little bit worried that we might have found a fair value and it might be going sideways rather than just going that V-shaped recovery to that 20,000 that all the bulls are looking for. In terms of the currencies, gold was a little bit of a mover here, up slightly on some of the weakness in US stocks Friday, and just sentiment towards US dollars being a little weak, given that they're raising rates and considering that they might be raising rates more aggressively next year than the market's priced in. It's surprising how weak the US dollar has been, but that does tell you that with good news and the US dollar can't rally, it's a very dangerous situation for it, especially now if any bad news comes out. If it's already weak after good news, if any bad news comes out, you could see some significant selling pressure come through. Seems like a fair value if it's been found for the US dollar, so we're looking a little bit more evenly balanced here. You've seen the euro lead some of the charges as well, holding gains above 118. Dips have been well supported, so if it was to retest 120, then you would probably see the gold testing 1300 just on the US dollar weakness alone in that view. In terms of dollar yen, struggling to maintain any sort of sense of direction. I haven't really seen that 114 test. That 114 is the level which has been controlling or containing all the rallies of the dollar yen for the last couple of months. Has not really been tested yet. We'll see if we can gather some support there. Yen generally is the weakest currency out there, while stocks are strong and global yields are rising, because they do target yields in Japan, keeping their long-term yields at 1% maximum, whereas the others, you're seeing rallies in the 10-year in US stock and in German yields as well. So seeing some big moves in the yields in the bond markets last week, and that's really hurts the yen's outlook. But that can change. There was some rumors, some murmurings from the BOJ, considering they are looking at all the unintended consequences of their monetary policy, which mainly is record highs in their stock market, or record multi-decade highs. If you're looking on what's been happening in the last 6 months or so. If you're looking at the Aussie dollar and Kiwi dollar, commodity currencies are well supported. You are seeing some strength coming through in oil. There was a Libyan pipeline that exploded overnight. You're seeing the oil hit 60 for the first time this year. Let me check that. Yes, this year, first time. So look, this is a big level. Psychologically, people are looking for 50 to 55 or 55 to 60. Above 60 starts to get a little interesting in terms of what it means for the fracking in America. How many rigs will come back online if the price goes up? Should be quite substantial in terms of extra supply coming online. That's a natural limiter to the rally in oil. As the price goes up, you get more supply. Look, if you're interested in how to play it, Coming through, Aussie dollar is well supported. 77.50 still very big level though. Haven't got past that. Kiwi dollar is ramping up here. Looks like it might test at 71 after holding above 70. But the best way to play it, and if you want to look at the chart which is moving the most at the moment, it is not. It is Canadian dollar, which is very normal. Canadian dollar has a strong relationship with oil, and given the green light to start buying, dollar CAD has been falling, which is Canadian dollar buying, of course, all the way from 129 down to this 126 support zone. If we break back below 126, you have to go back here. You can see that the support is coming in lower 124, so it's an important little level, and it does look like it's going to be tested in the next couple of days as oil leads Canadian dollar higher. Alright guys, if you have any questions, come through on the contact details below. If you're not a member of the easyMarkets dealing room, you can get access via the link below as well.